Insurance is very complicated, so today we thought we would break down total and permanent disability insurance, or TPD. Total and permanent disability insurance is designed to pay out a lump sum of money in the event that you are totally and permanently disabled from ever working again due to illness or accident. The leading causes of total and permanent disability claims are musculoskeletal, mental illness or injuries and accidents. There are three types of TPD cover. The first is own occupation. This covers you in the event that you are unable to work in your own occupation ever again, is usually more expensive than the other forms of TPD insurance, and generally you have to be working more than 20 hours a week to qualify. You need to be working in a safe occupation. Examples of this would include medicine, finance, teaching, management and administration. So for professionals and white-collar workers, it's generally fairly easy to get own occupation TPD. For tradespeople, if you're an experienced tradesman with qualifications, you can generally get own occupation insurance where there are no special risks. For example, you're not working with high voltage or working at heights or more than 10 metres. Any occupation insurance is when you become so disabled that you are unable to work in any occupation to which you are reasonably suited by education, experience or training. Some people can only obtain any occupation insurance. Typically, this may include anyone working less than 20 hours per week, unqualified tradespeople, or more dangerous occupations where you might be working above 10 metres or diving below 20 metres or driving trucks. Unqualified trades and supervisors could include pet groomers, hairdressers, working from home, or crowd controllers. Heavy trades include skilled or semi-skilled manual workers and heavy machinery operators who are not exposed to high risk via accidents or health hazards. Examples there would include floor tilers, glaziers, farmers and delivery drivers. The third type of TPD cover is activities of daily living. This is where you've become so disabled that you are unable to do any two of the general activities of daily living. Examples would include feeding yourself or bathing yourself. Some older policies have this wording, and some very dangerous occupations may only be able to get this type of cover. Heavy duties are skilled or semi-skilled manual workers and heavy machinery operators who may be exposed to high risks via accidents or health hazards. Examples include crane and bulldozer drivers, firefighters, fishermen, rural fencing contractors, or other jobs requiring working at heights of more than 10 metres. If you can, you would want to obtain own occupation total and permanent disability cover. So some examples of this are if you're a surgeon and you suffered severe burns to your hands, you would probably be paid out under own occupation insurance, but possibly not under any occupation insurance, because with that definition, you could be retrained to supervise others. Similarly, if you were a builder and you lost the use of your right arm in an accident, you would probably be paid under own occupation TPD, but probably not under any occupation TPD because, again, you could be retrained to be a site supervisor or project manager. If your current ability to earn income really relies on a specific occupation, then you are much better having own occupation insurance. As with all insurance applications, we need to properly underwrite and pre-assess you before looking at the cover suitable for you. The next question clients ask us is in or out of super. I'm opposed to holding total and permanent disability insurance inside super for a number of reasons. These include the claim will be taxable, which means your benefit will be reduced by tax at a time when you really need the money. Premiums reduce the future value of your retirement benefits from super. These days, it's so hard to get contributions going into super that it's a shame to waste part of those contributions each year with insurance premiums. Most insurance owned via super is on an any occupation definition. Lastly, can you get the insurance out of super? There are rare circumstances where the insurer will pay the claim out to the super fund and then you'll be unable to get the money out of super because the definitions vary slightly between the insurer and super legislation. However, if the only way that you can afford to have total and permanent disability insurance is inside super, then obviously that'll be the best way to hold it for you. It should only be seen as an interim measure though until you can afford to switch the cover back outside of super in the future. ASIC has recently released statistics that show that over 13 million Australians have TPD insurance. However, over 90% of those policies are currently owned inside super. This means that many Australians are probably not covered correctly for TPD insurance, and it's important to review what your current policies say. So how much total and permanent disability insurance do you need? The only way to answer that question is to really imagine what would happen if last week you suffered a medical catastrophe that meant that you were never able to work again. What would you and your family need? You'd probably need a lump sum of money to cover medical and rehabilitation costs. You'd also want to pay out debt, which would include personal debt, credit cards, mortgage, and maybe vehicle finance. And you may also wish to consider a lump sum of money to replace part or all of your income. How long would I need to wait to get paid a total and permanent disability claim? There are two parts of the definition to total and permanent disability. The first part allows for a payment without a waiting period. This usually happens when the cause is blindness or loss of use of one or more limbs or parts of limbs. There are some slight differences in the definitions amongst different insurers, and we would always need to talk to you about that. The second part of every TPD definition, for all other conditions causing disablement, is subject to a waiting period, and this waiting period is commonly 6 months after the medical event occurred. In my experience, when we're assisting you with the total and permanent disability claim, it then takes a number of months, 3 or 4, for the insurer to gather all of the medical information which they need to make their decision on the claim. So does TPD insurance really pay out? We have successfully made many total and permanent disability claims on behalf of our clients. Total and permanent disability claims within our practice have ranged from mental illness, chronic fatigue and fibromyalgia, central nervous system disorders, and accident and injury. The youngest TPD claimant within our practice was aged 33, and that person will never work again. For his family, it was the ultimate peace of mind in knowing that they were going to be financially looked after a catastrophe had occurred. In the 2018 year, there were over 26,000 total and permanent disability claims that were successfully paid out across Australia. So TPD insurance really does pay out. Is total and permanent disability insurance the only insurance that I need? No, TPD insurance should just form part of an overall personal protection plan. In my opinion, total and permanent disability insurance runs second to income protection in order of importance in your portfolio. If you have any questions about total and permanent disability insurance, please don't hesitate to give us a call.